Did you just hear that a company you're following is going to have a stock split and you're wondering if it's a good time to invest or not? Well, in this video, we'll talk all about what a stock split is and what it means to you. So let's get into it right now. Hi everyone, my name is TJ Eskew and welcome back to my channel. In today's video, we'll be talking about what a stock split is and what it means to you as a potential investor. So maybe you saw it on the news, read it on the internet, or even in the newspaper. If you're wondering what a stock split is, it's when a company's board of directors decides that it will take the existing number of shares that are out in the open market and are going to split them up into a larger number of smaller shares. In order to demonstrate today's topic, I'll be using some graphics of one of my favorite things in the world, pizza. So imagine there's a company that has just announced a stock split. I don't know, maybe Apple for instance. As many of you know, Apple is a very successful company with many different product lines and services. So let's imagine that a company's stock shares are represented by this pizza. The pizza is the company as a whole or the market capitalization, and each share is represented by one of the slices of pizza. For this example, let's imagine that our pizza is cut into 10 slices, a nice and easy number for everyone to understand, and each slice is worth $10. So now the pizza as a whole is worth $100, and any shareholder or slice holder, if they own one slice of pizza, it costs them $10 per share or per slice. While certain people can afford $10 a slice of pizza, there are plenty of people out there who might not want to pay $10 per slice. So instead, what the company does is take that same pizza and instead of slicing it up into 10 slices, they divide it up into 20 slices. So now, each slice, instead of being worth $10, is worth $5. Now don't worry, if you already owned one of the old $10 slices of pizza, well good news, now you just own two $5 slices, so your portfolio or your account hasn't changed. You still own $10 or 10% of the company or the pizza that we've been talking about. But the good news is for folks out there who may not have wanted to buy a $10 slice of pizza or a $10 share, now they have the opportunity to buy a $5 slice of pizza. It's worth less percent of the company, but it's a lower price for investors or pizza lovers who want a slice of the pie. Now what this doesn't necessarily address is the size of the pizza. Of course, the size of the pizza and how much the company is worth as a whole depends on a number of factors. Depends on the market, the timing of new products and services, the reception of the buyers, and of course just the general running of the company in a positive way. So if a company is no good, their pizza is going to continue to shrink. So no matter how many slices you have, that won't matter. But if a company continues to do well, their pizza will grow. And so whether you held a $10 share or slice, or two $5 slices, or even one $5 slice, the opportunity to have your slices go up in value is equal for everybody. Now it's still up to you or financial professional to decide whether or not you should even buy a slice of this pizza or this company. Not every company that does stock splits means that their shares are worth investing in, but it does allow investors who may not want to spend as much per share to be able to buy a stake in this particular company. But whether or not to invest is still based on your research or a financial professional who is there to help you. Please remember, this video is not investing advice. It's just a way for you to maybe understand a little bit more about a term that you've heard thrown around on the news or on the internet, which is a stock split and how it works. I hope you found today's video helpful, everybody. If you did, please hit the like button. It definitely helps me out and helps out the channel. And please consider subscribing for more informational content like this one. Until next time, this is TJ Eskew, signing off.